Well, we have been noting over the past few reviews that Telstra has been struggling for traction. It has made a series of higher highs, but that said, specifically from these lows, it's been quite a grind, so very difficult to gain any sort of traction, more of a stepping process as opposed to this strong impulsive price action that's really been seen from when's that, back in 2010. So that is the early warning sign. Also, of course, we've hit this significant zone of resistance, and that's something that we've been talking about over the past few months. There it is right there, goes back several years. So two patterns right there, this rising wedge hitting the significant zone of resistance, and the other pattern of interest is this rising channel. Now that really is very important as well. So the upper trend line right there, and here is the lower boundary of the pattern. So as it stands right here and now, we've seen the lower boundary of that rising channel tagged and thus far rejected. If I am to move to a more bearish stance, I would need to see the lower trend line here penetrated, break down through here, especially coupled with increasing volume, and it could well be that we have a significant high in position. And if that is the case, then the recent pivot high likely completes a much larger degree wave 1 or A, and then looking for an ABC correction down into the typical retracement zone down here. And much later down the track, this is the weekly time frame, so certainly not going to hit these levels anytime soon. So bigger picture down into this target area at circa $4, and then looking to zip higher from there. So really the three patterns of interest: the significant zone of resistance proving very difficult to penetrate. Also we have that rising wedge, or in Elliott terms they're known as ending diagonal triangles. That's the pattern right there, upper trend line, lower boundary of the pattern. Note that the lower boundary has been penetrated, and last but not least, the rising channel, and as I've just mentioned, it would take a break beneath the lower boundary of the pattern right here to suggest that we are going to embark on a deeper retracement. So from a trading perspective, no reason to be involved right here and now. One of two things need to happen before getting involved. The first, and obviously the most bullish, is that the upper boundary of that zone of resistance is penetrated circa 550. Feasible, but not looking likely, having seen this chop higher. And secondly, we'd need to see the lower boundary of this rising channel penetrated to move to a more bearish stance, and if that does transpire on that increasing volume, looking for some traction to the downside into this typical retracement zone.